I've tested at least 100 trading strategies over the past 6 years, and in this video, I'm sharing with you in full the only strategy I've decided to keep. The TAS strategy isn't just a passing trend. This strategy will still work 20 years from now. It's easy to understand, easy to use, and it's perfect for a beginner trader, but also for someone who's been trading for 10 years and still isn't profitable. My TAS strategy is broken down into 3 simple steps to understand. And let's get started right away with the first step. I'm on the monthly chart for gold, and the first step is to see if the financial asset I'm watching is in a strong trend. Here, that's confirmed. We're in a strong uptrend, and you can see that hasn't always been the case. Gold hesitated for many years, but at the beginning of 2024, it broke through resistance to the upside, triggering this strong bullish move. What interests me is spotting the strong uptrend across several major time frames. So, on the monthly chart, that's confirmed. Now let's check the weekly chart to see what it shows us. On the weekly chart, you can see that we had this breakout here at the start of 2024, and since then, a very strong uptrend has been in place. For the past few months, there's been a bit of a calm phase, a slight hesitation, a range, and some breathing room, which is totally healthy in a strong bullish trend. We'll finish confirming the uptrend on the daily chart, and you can see that the daily is a bit more mixed. We did indeed have a strong bullish move, and on the daily chart, we're fully in this range, in this phase of hesitation. You can see the market is moving back and forth between 2 price zones. Note that the statistics are in line with the previous trend, which is bullish, so the price is more likely to break out of this range to the upside and continue its uptrend than to break downwards. Now that I have confirmation that on the 3 major time frames, the market is bullish, except on the daily where we're in a pause phase, I know that on gold, I'm only going to look for buying opportunities. But be careful, not just any way. So, we're going to draw strong price zones where the market has a good chance of bouncing, and also mark the resistance zones which, once broken, will trigger a new bullish move. Why do I favor an asset that's trending? Because there's action, and when there's action in the financial markets, there's money to be made. When you're in a trend, the market will make bullish moves, corrections, bullish moves, corrections, bullish moves, corrections, bullish moves, corrections. Overall, the bullish moves will be much bigger than the corrections. And your role in a bullish trend will obviously be to buy the corrections when they are at good price zones, when the right signals are there. But don't worry, we'll go over that later in the video and in the strategy. The very first step is to detect the trend on the higher time frames. It's very important to know how to use the monthly, weekly, and daily charts, even if later on you'll be looking for buy signals on the 15-minute or 30-minute charts. Because you'll be going with the trend, you'll be moving with the money, and you'll have a much higher success rate than if you just stick to the 15-minute chart, for example, where it's easy to trade against the trend and you don't have the right price zones marked, the real, solid price zones. And by the way, the second step is to focus on price zones. I'm switching to the 4-hour chart. I'm going to draw my price zones on the 4-hour chart. You can also draw them on the daily chart, and I'm going to mark my price zones where the market is right now. I'm not going to mark them on 2012, 2015, or 2020. I'm really going to draw them based on the present, on the current price action. The first support that jumps out at me is this one. You can see that the last very bullish move on gold happened here, and you can also see that before this strong upward move, there was a price rejection at this price zone. The previous bullish move ran into resistance at this zone, so we can conclude that this price area is closely watched by sellers, and that buyers are closing a lot of positions there, which causes the price to drop. So you have a key price zone to use, to draw on your chart here, and we'll see together later on that it's going to be very useful for our trading. As you can see here, we have the breakout of this resistance, and at that point, it becomes a support. So, you know that if the market comes back down to correct on the support, those will be buying opportunities every time. The second very important price zone to draw is this one. It's simply the resistance of the current range on gold. You can see it once, twice, 3 times, 4 times, 5 times here. The price stopped at this resistance zone. So, if the market manages to break through it to the upside, it will almost certainly trigger a big bullish move. The price is currently in the middle of the range, so this is a phase where, as traders, we need to be patient. We have to wait either for a breakout above this resistance or once again for a return to the support to try trading a bounce to the upside. And we can also add a support level in the middle of the range, as you can see, which has made the price bounce back many times. As you can see, this whole area here, and here, many times, this support zone has made the price bounce. And when it was broken, it was violet. When it was broken again in the other direction, it was also violet. So, we potentially have here another very strong support to buy. You need to wait either for the bounce or for the breakout of the resistance. Since the market is very bullish, you follow the trend in this strategy. So for now, be patient. The entry zones are more powerful when drawn on higher time frames. That's why I'm doing it on the 4-hour chart, even though later we'll go down to 15 minutes for the signals in this strategy one use. You can also see that my price zones aren't just fixed price lines. These are zones that are more or less wide. This one is wide, this one is wide, this one is a bit less wide, but candlesticks never stop at a fixed price. So, draw your supports and resistances as price zones, not as price lines. I'm now on the 15-minute time frame to look for signals. And you'll see, my signals are very simple and very effective. I only use the engulfing candlestick. I add price action to that, chart patterns, of course, but I only use engulfing patterns on price zones to enter a buy position. Let's take this example here. You can see that the market was going down until it reached the price zone. We slightly went below the price zone, but let's see what happens in this price zone. It's very interesting. You have this double bottom, 2 bullish moves with a re-entry into the price zone. So it was a false breakout, which is obviously a bullish signal. We're going to save the support when we see that. You can see that the market here is going to offer a retest on the neckline of the double bottom. And quite simply here, at the break of this small trend line and this 15-minute candle, you have your first buying opportunity. Entry price at the close of the 15-minute candle, and what we're going to target is simply the previous order block, that is, as you can see, the former high that triggered the drop. As for the stop loss, it's very well placed like this because if the market comes back down to these prices, it would just be a retest of the price zone before dropping even lower. You can also see that the risk-reward ratio is really very good, so you have all the necessary characteristics for an excellent trade. You have the price action, you're following the upward trend, you're in a price zone that's very likely to work, and you have an excellent risk-reward ratio. After that, you'll need a bit of patience. You have a few hours of trading to reach the target, but it's a day trade that's very easy to take. And finally, you have professional level risk management with 2% risk on your stop loss. Let's see what happens next when the market comes back to the price zones we marked on the 4-hour time frame, and as you can see, they work perfectly for us on the 15-minute chart to find our buy signals. When the market isn't in our price zones, we do nothing, as you can see. We stay patient, we move to other charts, and we always wait for our price zones. It's very important to maximize our profits and our chances of success. Here's another great example, as you can see, again with a double bottom. It's very interesting, we see them quite often, but they work when they're on strong price zones. You have the market, same thing, it comes to test the support, breaks it slightly, but quickly moves back above the support with this excellent 15-minute bullish candle right after the 15-minute bearish candle. You have your neckline, which is roughly here, that is, the former resistance which, once broken, as you can see here, becomes the support because afterwards, the price moves back up, breaks through, and fully retests this support. You'll get one last test here on the neckline, and finally, the market will make its upward move. We enter the trade at this point because, in fact, we're going to see a price action breakout, as you can see, of a downward trend line. Once we have the breakout, right here, we can enter a buy position with relative confidence. We'll set our stop loss below the last low at the start of the upward move to protect ourselves properly. And just like before, we're going to target the previous high that triggered the whole drop. Once again, you have a good risk-reward ratio. Third example, you can see that the market comes back once again to test our support with this big drop, and the prices, once again, stop abruptly at the price zone. This time, the market bounces exactly off the support every single time. So, when you see this, you wait for the break of the small 15-minute price zone here. Here, it was a small support. It was broken to the downside. It became a small resistance. You can see it. The price is going back and forth. And so, once the price breaks this small resistance to the upside, it becomes the support again. So you can enter a buy position exactly at the close of this 15-minute candle. As always, we're targeting the previous price zone that triggered the start of the move. So we're talking about this price zone. You place your stop loss at the level of the wicks here, so that if the market comes back again, it becomes less interesting. We don't want to be in this trade. And then, we wait and let the market do its thing. You can see that the market will only hit your target here. Thank you all for your attention. Practice implementing this strategy and let me know in the comments if you liked it, if it was helpful to you.